into your savings or investment account. So if you want a secured future, aim at increasing the percentage of your investment or savings. Contact Enterprise Trustees for your expert advice towards your financial freedom. I'm Daniel, and this is Retirement in 60 Seconds by Enterprise Trustees, where all your financial questions are answered.
Yeah, pretty much. I have a personal rule, which I call the 80-20 rule. So I use the 80-20 rule in saving for my future.
Saving for your future is one of life's most prominent decisions and one of the common investment recommendation strategy is the 50-30-20 rule, where you invest 50% of your income into your needs, 30% into your want, and 20% into your savings or investment account. So if you want a secured future, aim at increasing the percentage of your investment or savings. Contact Enterprise Trustees for your expert advice towards your financial freedom. I'm Daniel, and this is Retirement in 60 Seconds by Enterprise Trustees, where all your financial questions are answered.
Yeah, pretty much. I have a personal rule, which I call the 80-20 rule. So I use the 80-20 rule in saving for my future.
Saving for your future is one of life's most prominent decisions and one of the common investment recommendation strategy is the 50-30-20 rule, where you invest 50% of your income into your needs, 30% into your want, and 20% into your savings or investment account. So if you want a secured future, aim at increasing the percentage of your investment or savings. Contact Enterprise Trustees for your expert advice towards your financial freedom. I'm Daniel, and this is Retirement in 60 Seconds by Enterprise Trustees.
Hello and welcome to today's edition of Tomorrow Today's webinar, which is your number one place to go when you're seeking advice and insights into your finances and your money. This program is powered by Enterprise Trustees, your advantage, your number one pensions partner. Today's topic is quite exciting. And so just before we delve into today's topic, I'll just encourage you to share the link with your friends and family so that we are all on the same page when it comes to our finances and the current financial landscape that we are all experiencing. My name is Cassandra, and I am your moderator for today. I will introduce my guest and panelists in a bit, but just like I said, kindly share the link and let someone in the conversation. Yesterday, I found myself in a conversation and everyone was saying what they felt like. Someone says it's because it's this one. Someone says, oh no, inflation has gone down because of this and because of that. And I was like, this is where this program is very important. And so today we want to try and highlight and educate us all on how and why the cedi, the dollar, has dropped, why the cedi is doing well, and why inflation has gone down. All of these have factors that has influenced what is happening or the economic situation that we are finding ourselves. We are enjoying it though, but is it magic? Is it a miracle? Will it go down again? Are we going to enjoy this for a long time? What do we do in the meantime, and how do we manage our money, especially our pension funds? Today's topic is the current financial landscape and its impact on our pension funds. My panelists today, let me start on to my right, to my left, to the far end is Obed Odente. He is the Chief Investment Officer, IC Securities. And Yao Kusi Echampong, who is also immediately to my left, is Assistant General Manager, Finance at Enterprise Trustees. To my far right, our lady is Akosia Ejewa Nimako. She's an investment analyst at Enterprise Trustees. And to my immediate right is Stephen Tete Tay. Investment Manager, IGS Financial Services. Gentlemen and lady, you're welcome to today's webinar.
Thank you very much.
Just like I was saying before, yesterday I found myself in a conversation and all of a sudden, inflation, the dollar, because I think a couple of months ago I had some dollars that I was, releasing small, and I was enjoying the way I was getting a lot of money for, I think it was 16 point something then. Then all of a sudden, we are here at around 10 point something. I'm not sure this morning what the rate is. And then inflation goes down. So everyone is like, wow, describe what is happening for us. Because as people are traveling right now to work, sitting in the office, everyone is saying what they know. And sometimes these things are confusing. But let me start with you. What is currently happening?
Thank you. I'm happy to share some great insights around what is currently happening. But just to give a bit of background so we can appreciate the context well. In 2022, we all saw what happened. Ask yourself, the kind of surprises we are seeing today were similar, right? Because in 2022, when the economy was in distress, we saw depreciation somewhere around 40%, inflation somewhere hitting 54%. So from 2022 to 2023, we've seen some effort of recovery from Ghana going under the IMF program, a lot of fiscal consolidation measures being put in place, and other measures put in place to enhance our reserves. So our reserves, which are mostly in hard currency, that is in the US dollar, and also we have a bit also in gold. Right. So following the story from there, what happened is that under the IMF program, there are some key targets and some discipline measures that need to be put in place to ensure that the economy recovers, because it was in tatters, right? So fast forward 2023, you saw the government of Ghana implemented the domestic debt exchange program, some form of debt restructuring to bring our debt into the sustainable levels, because as of then, we could not access the international capital markets because our debt levels were unsustainable. Okay. And that was limiting. I know the international capital markets will gives us access to hard currency.
Yes.
So it means that once we don't have access and our reserves are low, we all know what that implies. It means that supply of hard currency is something that will continue to be a problem. 2024, globally, we realize that due to geopolitics and all of that, gold was doing quite well, which was also a key component of our reserves. So what we see that a shift in policy from government to ensure that our reserves are robust, the supply side is strong. So we saw things like the gold for reserves policy come in place to shore up the reserves, given the fact that we cannot access the international capital markets. Also, we saw a lot of fiscal consolidation with some moratorium on payment of hard currency debt and all of that. That means that our outflow in terms of hard currency will have to decline. We've seen our Euro bonds being restructured, so on and so forth. What that means is that on the outflow side, there have been a limit. There have been some slowdown until all of these begin to surface, where we have to service hard currency debt in significant sizes. That could pose a threat. But coming back to the question that you asked, so what we have seen largely is some discipline measures being put in place deliberately to correct what happened in 2022. So you say more or less like this is more like a reversal of what happened in 2022.
All right.
Because before we can make progress, we need to make some correction.
Some correction.
So, I'm sure there have been instances where we have seen people have said that the currency has been undervalued. That's the CD. So how do we correct this? Once we put in the necessary policies to make sure that the reserves are growing, as we speak now, from somewhere about 2 months of import cover in 2022, we are at about 4.7 million on the back of some of the policies that have been put in, like a gold for reserves. Like I said, on the international capital market and also globally, gold is doing well because of the geopolitics and the risk that we are seeing. So on the back of gold prices, which form part of our reserves, you can see our reserves going up. The new gold board that has been formed also supplies the market with almost about 200 million USD every week.
Okay.
So it means that there's enough supply of dollar in the system now.
So that is basically what we are seeing.
Yes, exactly what you're saying. And the strengthening of the currency has its other ripple effect in terms of inflation. So, I mean, we see inflation going down is on the back of some of these measures and the physical consolidation that we are seeing driving the agenda. So, yes, we are in a recovery and the outlook looks positive.
Looks positive. We are enjoying it, and we're excited if it will remain, or if it will stay like that. Yeah, let me come to you. Obed has given us a bit of a historic event into what we are seeing now. However, someone will ask, because this program, of course, is not being watched or enjoyed or consumed by financial analysts, and so they are very little we understand when it comes to most of the things that Obed has talked about. But even though we really truly appreciate it, for you, what would you say has changed? Because it's been very few months since we're now here. What is it that has changed? Has manna fell from somewhere, or what would you say is the main thing that has helped us to get to where we are now?
Right. Thank you very much. So picking up from where Obed left off, I think we will go to basic economics to see what is happening. The forces of demand and supply is at play over here. So we see that people want dollars and then they get the dollars. And because they are getting the dollars, it has taken away the speculation, which some time ago was seen as a driver of the exchange rate, because everybody wanted to keep dollars and we dollarize the economy. Yes. And so by making it available, it has become quite unattractive for members, or maybe for players in the space to keep the dollars, and so dollars is available. And also from the gold sale, because there has been some significant sale in gold reserves, and that has made dollar available. All put together, we have enough dollars. But then the point is that to what extent are we continuously going to have these dollars supplied to the market, which will bring us back to the fundamentals of the economy. Have we corrected the fundamentals of the economy? Are we producing more? Are we self-sufficient? So these are issues that will later dovetail into the conversations of the assets that we are having, and why maybe performance is even as at now at the level that we are seeing. So somewhere around 2022, we witnessed a significant depreciation of the cedi, and the value of the assets that members were having in dollar term dropped. From somewhere around 6 cedis, we moved to about 12 cedis. And so as at that time, if we were chasing maybe it's $1,000, the dollar value of your asset in cedi term would then be about $500, which is not so good for us. And inflation was up over there. So all put together, we are saying that we are seeing a good thing, but there are challenges in our economy that we need to be able to fix for us to be able to have comfort that what we are enjoying will continue. The manna will continue to, fall for us all to be able to enjoy. But I would say that it's something that is good for the economy, it's good for everybody, because it's not about having high interest rates on your fund that matters, but it's the purchasing power of the money that we give you. So if we give you 10,000, 10,000 can build you a home. That is much more preferable than giving you 1 million, and 1 million can just maybe buy you wache on the streets.
I like that. I like what you just said. Akusha, let me come to you. Based on what Yao just said, what would you say all of us need to do to contribute to the kind of enjoyment, stability that we're experiencing now?
Okay, so from what Obed said, and adding on to what Yao also indicated, I mean, there have been a lot of history and background to what we are experiencing now. When we look at our economy, Ghana is heavily dependent on imported stuff we import a lot of things into our economy. And so structurally, I think what the government needs to look at is to make some structural changes. And so we are importing some things that we think that if the resources are in here, and so when we implement some policies, we should be able to come up with factories that can build or produce such produce that we are importing from abroad, like toothpaste and other produce. So when we are able to cut down on the importation that we do, I think that will impact how we also demand for foreign currency on the market. I also think that internally we should also have trust in our leaders, and also ensure that, like we are seeing on board, there's always transparency, there's always information on the ground whenever you need such information. And so that also helps relieving some sentiment of Ghanaians. And so when it comes to the trust that they have in the currency, like you rightly said, it's all about demand and supply. And so when we know that once someone's here that there's going to be a shortage in dollar, and such a person is a businessman, he would want to go in and buy more and keep it so that whenever he needs it, he can be able to use that. And so when these sentiments are cleared, it would also help curtail some of the things that we see.
I like that. Stephen, would you say that some of these sentiments are cleared, and that is why we're experiencing, some stability with the city?
Okay, so in terms of the sentiments, usually what happens on the broader economic front is that investors or businessmen and women usually want to see what next. And I like the point where Obed mentioned the fact that going forward, there are some observations that need to be made for businesses or individuals. Once the indicators are looking good, of course, they are confident in the interim, but then they are looking forward, especially if you take the OMCs or those that are into the oil production, for instance, they are always looking forward. So then in the next window, are we going to have this hard currency to be able to transact business? So, of course, confidence is very key. And one of the things you are seeing currently in terms of the indicators that are trending downwards is that there's some bit of confidence even at the back of the good for reserve and the current levels of reserve that we are seeing. So it looks kind of good for doing business, which kind of bring issues of speculation down and helps to project or see the future in a more positive light.
One of the things that all of us of course are concerned about is our monies. So how has this impacted the various investment vehicles? Because once we see this economic situation, we see that there is some kind of stability. People are now thinking, okay, should I move it here? Where should I put it? How has this also impacted these investment vehicles?
Yeah, so investors generally always look forward to areas where they can optimize their returns, and as managers of your pensions, our aim is to look at areas where we can diversify the investments so that at the end of the day, this investment yield the optimal return at the time that your retirement is due. So in the market, there are various asset classes that these pension assets can be invested in, ranging from the government securities, the bank securities, and collective investment scheme, and even the alternatives. So these areas really, over the period, in the face of this appreciating, CD, have shown that yes, though interest rates, have come down generally, which is good. I think Yao did mention the fact that on the broader front, we look at managing an economy where key indicators are really on the low side, so that doing business, access to credit becomes much more easier. So once interest rate is coming down, of course, it gives the investors or the members of the scheme the opportunity to take the upside terms of their retirement income. Because over the long term, you're able to ensure that, what you are taking home, will be able to carry you to your grave or up to the point where you'll be exiting this.
That's all we're thinking about. From where you sit as an investment, analyst, which of the investment vehicles would you say has been resilient in the face of, all that has been happening?
Interesting. So, like you said, when you're looking at investments, we can't rule out what happens in the economy to how you're going to optimize returns. There's always going to be some macroeconomic changes. And so as investment analysts or fund managers, what we do is to make sure that you implement strategies that will optimize the returns of your members. Okay. And so coming back to your question on resilience, from what we've seen in Ghana, I think we are always used to debt. We are always expecting some steady growth on our investment. And so most Ghanaians are more inclined on treasury bills and bank fixed deposits. And so,
Akosia, is it okay if you come closer? I mean, your microphone.
Can you hear me?
Yes.
All right. Thank you so much.
Thank
okay.
you.
And so we've realized that Ghanaians are used to that steadiness or growth that they see on their investment. But going back into history, we've known that whenever there's a change in macroeconomic conditions, that has a short-term impact on our investment as well. And so quickly, as fund managers, we also look at strategies that would optimize and hedge on such risk that we see on the market. And so in terms of resilience, I would largely say each asset class has its own correlation to how the market moves.
How the market moves.
Yes.
Okay. Obed, from where you sit as an investment, just like I asked Akosia, what would you say, which of the vehicles would you say has been resilient?
Very well. So largely, like we all know, economy is sort of running in cycles, and so does markets. Building a diversified portfolio is the key.
Is key. Okay.
Even not looking at a specific asset class, because by the time you go into that asset class, something else could happen.
Could have happened, yeah.
So I want to even shift it to, how are we considering the conversation of diversification? Because today, we are looking at the CD strengthening.
Yeah.
The next phase, everyone is looking at how is it going to weaken?
Yes.
And what's the pace?
Yes.
So today should not necessarily only determine how you want to position or what asset you want to buy. As it stands now, let me just touch briefly on equities. If you look at 2024, even year to date, the equity market has been on the upside. Last year, the equity market did over 50%. Year to date, I was done over 20%. So it's been quite resilient, right? Mainly driven by, MTN, which has been one of the largest stocks on the market, which is not, it's more of a defensive stock. So a lot of the things that are happening are not really affecting it. So we realize that sort of resilience has carried the market. When you come to the debt market, it's been quite volatile. But then at this phase, we've seen some recovery. Prices on debt, especially bonds, have gone up. What I mean by that is yields have gone down. Right? Yes. But in terms of resilience, when you compare debt over the past, debt and equities over the past year or so, the equities market has been very resilient.
Okay.
But I want to emphasize the fact that it's not about even just speaking on what has done well today. That will be someone will hear that equities is doing well.
And then the next thing they're running it. Yes.
Because we've said this today.
Yes.
Before you realize people are putting orders to buy equities, any stock they have. But it's about understanding what the long-term trajectory is.
I like that.
Where we are heading towards. Then you position such that whatever happens, you are well
We're
hedged.
able to, yes.
So creating a balance across is the key to this conversation.
Thank you. That is very key. And of course, that is why programs like this is there, so that you don't just take advice from the person who said, oh, the equity is strong in the trotro, or you don't just take one side of something, you know, the way we do in Ghana. You just go and buy cocoa. Someone says, is this one? You start running towards there. Yeah, let me come to you because you're with, you're with us in terms of pensions. Reason why we want to also know is, even though we've diversified, we want to know where we are putting more of the eggs. And so sometimes we want to know which one is stronger or which one will be stronger over a period of time and which one, quickly turns. So which of the investment vehicles or investments have you seen that attracted a negative, that was really impacted negatively through the period? And what are the factors that resulted in that?
All right, thank you very much. So let me underscore the fact that the world is changing very fast. It's becoming much more complex, very volatile. And so for all these things that we are seeing, it calls for paying attention to diversification. And so as trustees, the beginning of this year, we had a session to focus on diversification. How do we position our pension scheme to be much more resilient and to be able to respond to shocks, no matter where it is coming from, whether it is from external or even from internal? We should be able to respond to that. And so as part of the strategy, we recognized that there were two key factors that is going to impact our pensions funds. One of them is the currency, which we've spoken about. And so then there was the need for us to be able to have some form of hedging in the portfolio mix to make sure that when currency depreciates or if it appreciates, we will still be fine. I talked about somewhere around 2022 when the cedi depreciated rapidly, and a similar thing has been observed now. From that time period, we decided to look at Government of Ghana Eurobonds because they were issued in USD that provided some form of resilience. Today, it's coming back at us at the point when the cedi is strengthening. Then it means that some losses are being incurred on it. But we should look at pensions as long-term because the outside environment will be changing, but then at the end of the day, the portfolio should be able to give you the results that you need. Then also, so I've talked about currency hedging, then we'll talk about the kind of asset mix that we want to have. And that has actually driven us into the alternative space. And so we are looking at private equity, we're looking at private debt, trying to touch the real sectors of the economy. And it's a rippling effect. Once we're able to touch these sectors of the economy, it will create employment and people will have more income and then they can also contribute into their pensions. And at the end of the day, the consumers that we want to serve will retire with some handsome amount. And so we want to focus in that area. We were heavily overexposed to government securities, especially after the DDEP. We're doing somewhere around 80% of that. We want to bring that one down. It is too much, so maybe bring that one down to about 50% and then have other asset classes in there that will make sure that the portfolio is much more resilient. But coming back to the question that you have asked about the schemes and then the asset that has really, impacted the performance, we can talk about MTN. Its performance has been very great, but we've also seen some price, dip recently. But I'm sure the fundamentals of the company is still solid. The management is doing the good things that they have to do to position their business. But this is market, and we need to understand that on the stock market, the forces of, once again, demand and supply will determine the price. Yeah. And so if there is more supply on the market, certainly the price will come down. But as strategic investors, we will want to even take opportunity and do more. so that we will position the scheme to take advantage of the upside in price when that should happen. And so putting all these things together, we've initiated some process that will enable us diversify the portfolio and make it much more resilient to the shocks that is likely to happen in the economy. And we can let our members be rest assured that the trustees are not sleeping on the job. They are working day and night. And I'm sure we just even came back from a scheme strategy session, 2 days, spend it outside to be able to bring all the experience that we have to bear to make sure that members' funds are protected against wanton losses.
Thank you. Akusua, when Yao was talking about MTN, he mentioned leadership, and so I do understand that for any fund to do well or for any vehicle to do well, it also largely depends on who is managing it. For enterprise trustees members, they are more concerned about their portfolio, about their money. It's a long term, and so, which of these investment sectors? Basically, we want to know how are we leveraging on the economic scene for our members.
Okay, so like we rightly said, the market is in cycles. You may have an upside. At some point, you'll see a downturn. However, as fund managers of the pension funds and also as trustees who ensure that our members are getting the right benefits and the right retirement funds that they are looking for in the long term, we ensure that whenever there are changes in the economy, we also implement strategies that would ensure that your retirement funds are preserved in the long term. So again, what we are looking at, like he said, we've seen some changes in history, and so we know that diversification is very key. And so we need to look at some of the assets that we are heavily weighted on, like he said, in terms of Government of Ghana securities, and look at ways where we can reduce such assets and add on resilient assets that would preserve the long-term capital of our pension funds. Yes.
For someone who has pensions, of course, they are thinking, how does this also impact me? And so how would you describe what is currently happening now and its direct impact on our trusts?
Okay, thank you. So in terms of the economic happenings, what we're seeing currently in the market, yes, we've seen the CD strengthening. We've seen interest rates dropping significantly. We've seen inflation also trending downwards. We, as a trust, we have an array of investment securities that the trust invest in, and as my lady said, these assets that we invested in are being monitored and adjusted as and when the needs or the trends in the market change. So at any point in time, we are constantly adjusting to see which areas we can push the assets into so that we can increase the returns or the investments for members. So for the schemes, areas that we've seen in terms of the appreciation of the CD, for instance, the Euro bonds areas, the CIS, where maybe exposures to some exchange traded funds may be impacting the performance of the scheme. We quickly adjust those investments or assets to areas that will eventually inure to the retirement income securities of members. So constantly, these things are being monitored and adjusted to reflect the current situation to ensure that members, are benefiting in the long term.
I think it's important that, these conversations go on so that we understand where we are, where we are going, how to navigate. But also, as you're talking, I'm thinking it is important for you to have people who understand what they're doing. Like, it is really key, because if you put your money where those who are managing it do not understand the ups and downs and they are not resilient themselves to be able to know when it's going. Because sometimes when these dynamics happen, it goes like boom. So it has to be those who have also forecast. And that's why if you're with enterprise trustees, of course, you know that you have great managers who are also taking care of your fund for you. Obed, in what ways are we strategizing to manage the risk to ensure long-term growth? Yes.
One key thing is strategic asset allocation, especially in these critical times. Before the conversation, realize that uncertainty is a key word globally. So ensuring that strategic asset allocation is done such that a portfolio that is able to weather through different phases of the storm is put in place is a call to this very conversation. So what are we doing to ensure that the portfolios are strategically positioned to be able to weather through all of this? Is to understand the dynamics. If we look at 2022, given what happened to the currency, given what happened eventually to Government of Ghana Securities, diversification became the key word. Pension funds hold CD assets. Now the conversation is how do we then look at assets that will give us exposure to hard currency? The pivot does not necessarily mean that you put all your portfolio in hard currency. So you now need to have an asset manager who understands the dynamics.
Absolutely.
Right. How do we set this strategic asset allocation such that, looking at where the currency is, could there be some correction? Is the CD overvalued or undervalued? It takes a very good team to be able to do this.
Yes.
Right. So I'm looking at enterprise trustees and the fund managers that they have, with IC asset managers being a core part of it. Understand the dynamics. We could say confidently that despite the fact that the CD has appreciated, day in, day out, we could see some bit of volatility on the performance of the fund. But if you look at year to date, that the strategic asset allocation that the fund manager has set, is it playing positive? So daily, you could see some few volatilities, movements up and down. But then if you look at it maybe over a certain period of time, that the portfolio is reasonably growing. And that is the value that, the quality fund managers that enterprise trustees have brought on board are doing. Yes. Like Yao did say, you have exposure to Eurobonds, the exposure to CIS that have global assets. But the limit or the level at which these exposures have been made, and then other assets which are more or less interest income generating assets, because exposure to those assets or the weight is significant, it's able to help towards to weather down the volatilities and the impacts that this exchange rate risk that we are currently seeing. On this side, it's the city strengthening.
Yes.
Impacting hard currency assets in the portfolio, because once you're holding dollar assets, what that means is that if the city strengthens, the value will go down.
Yes.
And the portfolio should be well positioned so that when this happens, other assets will be able to net off those impacts. And I think that's the kind of portfolio that we have.
Okay.
Right? When things turn around and the city now begins to weaken, what happens? Your dollar assets, net off the other effects on interest rates and how that will cost the fund in terms of pricing on the other assets, fixed income assets and all of that, right? So strategic asset allocation, that, like I've explained, that is how we are navigating it and making sure there's a diversification in the portfolio.
Strategy is key in navigating, these financial turmoils, to know where to go, when to go right, when to go left. But just like I said, follow the ones that know the road. Some of the things that you are discussing here, you need to have gone to school, you need to have been sitting there where they sit to be able to understand it. And so it's important that you don't take advice from your friends. Oh, go and take all your dollar. Oh, go and take all your CD. No. It is better for you to listen to programs like this, for you to go to fund managers like enterprise trustees when it comes to your pensions, for you to seek advice from the right people. Very, very key. There are questions that you would also love for us to ask our panelists. But before that, in order for you to benefit from your pensions, in order for you to benefit from enterprise trustees, know your customer, KYC. So basically, we would love to know you. We want you to be able to update your personal details. Sometimes the address you gave to us when you signed up with us has changed. or even your numbers. So scan the QR code that you see on the screen and make sure that you use that process, follow the process, and update your personal details with us so that when it's time for you to cash in or when it's time for you to benefit, you won't have any problems at all. So this is the way that we want to get to know you more. Basically, it's for you to go onto our portal, scan it, use the process to update your details with us so that you face a very smooth process whenever you have to benefit or cash out from us. Yeah, let me come to you. These are some of the questions that people, have noticed or they want to ask because these are questions on their minds, and we would ask that you help us, or you help them to answer these questions that they have on their mind. Someone says, I've noticed a dip in the value of my pensions investment recently. What's causing this? And should I be concerned about the long-term impact of my retirement savings?
All right. Thank you very much. All that we have said about what is happening to currency, what is happening on the stock market, some of the selections that we have made on behalf of the scheme is actually contributing to this.
Can you please mature your voice for us?
All right. Thank you.
Yeah, I think maybe bring the microphone a bit.
Okay. Good. It's better now?
Yes.
All right. Thank you. So what is happening in the economy is impacting on the funds. But we want our members to be rest assured that we have much more resilient portfolio. And so, yes, we have some dip in price. But if you look at the year-to-date performance, it is still positive. Okay, for all the schemes that we run, I think it's a double-digit, performance. We did very well in the first quarter of the year, but I think immediately the CD started strengthening between April and May. Members began seeing all this impact on their funds. The good news is that we have seen some stability.
Okay.
So we have seen some stability in the exchange rate recently, and we've seen that the fund is returning value again, to members. So the dip actually has been reversed now. And from the conversation that the president had with the exporters, giving some kind of assurance to them, because they are also impacted, because the free appreciation of the cedi was also impacting their foreign earning when it is converted into cedis. So some conversation happened, and from that time we've seen that it stabilized around the 10 cedis, 10.2, 10.5 thereabout. And so we've seen that free appreciation or the strengthening of the CD stabilize, and that should give comfort. Major percentage of the portfolio is actually in CD assets.
Okay.
So that is the good news.
Okay.
The good news is that when the CD strengthens, the dollar value of the assets has gone up. So previously, yes, the exchange rate was around 15, 16 CDs.
Yeah.
So if you were having maybe 1 million, so it was still lower.
Affecting us, yes.
Assuming that we were having maybe 1.5 million, that would have been the equivalent of about $100,000, dollars. But then today, that it has come down to 10.2 thereabout. You are having more in terms of the dollar value. So we see that happening, but let members be rest assured that we've seen the worst, and we are seeing the good times. So very soon they will see their fund returning much more value to them.
I like that. Akosua, would you like to add something on that? Should members be worried? How should they, generally, what kind of hope should they be holding on to?
Okay, so the good news is that there has been some stability. And the good news is also that we have fund managers who are also always monitoring the market, making sure that in terms of their strategic asset allocation, whenever there's a need to rebalance the portfolio, when I say rebalance, look at the assets that they wanted to increase or decrease and make sure that considering the new development that they are seeing on the market, there's a need to make some changes. And such experience that we have on board should give members the assurance that their funds are in very good hands.
Absolutely. Stephen, given the current financial climate, are we still on track to meet the long-term financial goals? Because, you know, the thing about Ghana is sometimes when things happen, then your relatives tell you, I told you to keep your money under your bed. So what is the hope for those of us who brought our money? Are we still on track? You know, because we have plans we are planning for the future. We want to have a good future, and that's why we have investments in pensions. And so are we still on track?
Yeah, very well. Just before I come to that, you know, just to do an add-on, you know,
yes,
to
please
the
do.
Earlier question, you know, from members. You see, what happens, you know, typically in an environment where there are ups and downs, and typically happens, you know, for investment, we have instances where the market will appreciate or assets will be yielding in a certain area, which the fund manager, would be, you know, allocating more of the assets into those classes. So within a period where there's a change, during that period of rebalancing, that is where you tend to see a dip. But that is not to say that, you know, your fund or your pension is not doing well, because the long term is what we have in perspective.
I like that clarity.
And then when we come to, you know, going forward, which is specific to your question, what, you know, I would say is the fact that yes, we are on course, considering the various arrangements that we have in place. Our fund managers, you know, ensuring that they are dynamic in terms of the asset allocation. You know, the long term is not the focus. The short term, there may be fluctuations here and there, but as and when those observations are made, you know, they are adjusted quickly, you know, taking the future into perspective to ensure that at the time that you retire, you know, your income is very much not secure. So we are very much on course.
I like that. Yeah. Robert, are we on course? Looking at, you know, everything that is happening, how is it going to benefit us in the long term, especially those of us who have taken the step to plan for our future?
Yes, like I did indicate earlier, it looks good. But I will be quick to say that uncertainty and challenges are things that are constantly with us. So what we have seen today, what we are seeing currently, are happenings that are not an end in itself, right? So the portfolios have been positioned such that it can be able to weather through any future events, whether positive or negative, right? So it's a good decision to have pensions. It's a good decision to have people who have the expertise managing your pensions. Even if it's a personal pension, it's a good decision. And saying that, look, I'm going to keep this money myself, just my bank account.
Very true.
Because I can trust what will happen. You keep your money in your bank account, I can show you that in the next 3, 4, 5 years, you can do nothing.
Yes.
Right?
Very true.
If you look at pension funds over a long term, the story looks positive. Pension funds, I mean, we do not have a data that shows how pension funds are doing. But, I mean, generally, if you look at the market and how things are evolving, you can attest to the fact that pension funds could probably be doing, over a period of like 10 or 5 years, about 25% in terms of returns, despite the fact of some of these, I mean, dips that we see along the path. Volatility in itself is just a symptom of risk, and not risk in itself. So when we see volatilities happening, that should not put us on the sidelines. It's better to have someone who understands how this is happening, how portfolios can be built such that it can hedge against some of these happenings. I mean, early in the year, getting to know what a Trump protectionist stance could mean for global markets, realize that it's prudent to add gold to your portfolio, right? And some of these uncertainties will continue to unfold, right? But then if you do not have the expertise who understand the dynamics and how the asset class correlates and works, how would you be able to build that defense into your personal funds that you have?
Absolutely.
Right. So it looks positive. And the assurance is that you're looking at a diversified portfolio. Diversified portfolio will give you that hedge, will give you that sustainable returns. it will give you that kind of growth that you want in the long term, so that at your retirement, you can have a comfortable retirement.
I like that. Thank you very much, Obed. It's been really great hearing from the experts themselves. I like the fact that, it's good to diversify, but at the same time, you and I cannot do it by ourselves and decide that I'll put some on the left side of the bed and some on the right side of the bed. And when this happens, I'll take back my CD and I'll take my dollar. You can't do it. It's important for you to consistently rely and trust in fund managers who know what they're doing, especially the good ones like Enterprise Trustees. And so the advice today is, of course, there will forever be ups and downs because it's life. But it's important for you to consistently trust those who know what they're doing to be able to advise you. And if you do need any advice, it's better for you to go to them. Because I know we sit in torture and someone is saying something and we pick it quickly. And the whole day we are stressed because of what someone said in the torture. The person sells tomatoes. The person is a kenke seller. The person is a cocoa seller. The person is not a financial analyst. So please, instead of you quickly wanting to make decisions that is going to hurt you, why don't you pick up a call Enterprise Trustees, talk to your fund managers, talk to them about what is happening. It is very key. Thank you so very much, guys. Thank you for coming and sharing your advice with us. But just before we go, in a short, what would you say, what is your advice to our viewers or our listeners today when it comes to financial things? What will be your quick advice to them?
Okay.
I'll start with you, Obed.
Very well.
Your mic is clearer, so let me start with you.
Very well. I think I still want to emphasize on the point I made, that we are in a terrain that, for those who still feel it's good to manage their own portfolios or manage their own investments, to still try to rely on experts. If you look at how the investing landscape in Ghana has evolved, from banking sector crisis, DDP, and what is happening in the macro space, these are things that are very technical.
Yes.
It's important that you trust people who have the expertise to be certain that you are creating the right value for your future.
Thank you very much, Obed. Yao.
All right, thank you very much. So I want to speak to our members, and I want to tell them that we value the trust that they have given to us. And on behalf of the board, the management of Enterprise Trustees, we value that, and so we are doing everything possible within our means to make sure that we deliver on that trust that they have in us. First and foremost, I want to say that diversification is key, and so we have diversified the portfolio, and that is to make the portfolio much more resilient for them. And so what they are seeing is a short-term blip, let me put it that way. In the long term, their portfolio will do well, and it will turn out very well for them. And so those who do not even have enough pensions, it is time for them to consider that they will want to do more for their retirement, because we don't know the future. There is a lot of uncertainties, and the only way by which you can prepare is to allow the experts to be able to do that. And fortunately, as trustees, we have the experts. The way the National Pensions Regulatory Authority have really formed the pension scheme is to make sure that all the experts are in there and your fund is also protected. We don't receive your fund as enterprise trustees. You pay your money straight to the custodian. Fund managers provide advice. There is a board that makes decisions for you every day based on the advice that they receive from the fund managers. And so I would say that instead of doing a bet on what the currency will turn out and going to buy dollars or then it becomes a problem, why don't you bring all this money into the pensions fund for it to be well diversified for you? So that is my question to our members, that they should think about it and do more with enterprise
to secure their future even better.
Thank you very much.
Akusia.
So I would like to add on again to our members and to everyone out there that pensions is very key. And so even though if you're not in a structured corporate entity, we still have personal pension schemes, which has been suited for such people and even others. And so there's a need to invest towards your future.
Yeah.
And so I advise everyone there that there's a product for you. I mean, we have different constituents. We have the aggressive ones that looks at people who are, in terms of risk tolerance, have a very high risk tolerance level. And we also have the conservative one, which is also tuned to people who are not so open to certain risks. Like we've said, the market has cycles, and so each person has his own risk tolerance level. And so there's a product out there for everyone. And so I advise that, again, our doors are open. You can walk in anytime, talk to our financial advisors, and we'll get the right product for you.
Absolutely.
Yes.
Stephen?
Yeah, thank you. So, final concluding thoughts. I will encourage members to continue to, save towards their retirement, because over the period we've all been boxed to, the formal or the mandatory schemes. We have the opportunity to really optimize our retirement income into, the tier 3, which we have the personal pension or the group, personal pension scheme. So there's really a great opportunity for members to optimize their retirement income. So I will encourage those that are on to continue to increase their contributions, those that are not on, to talk to us at Enterprise to ensure that, yes, at the time where you go to retirement, you have a good retirement income. And to also make a call for members to update their KYC. I think is something that is very important, so that at the time where you go on retirement, you don't have issues about, where to, access what from. But, your information in terms of beneficiaries, your phone number, email, and all that, they are intact, so that consistently be able to monitor how your fund is doing.
Yes, absolutely. Very important to update your details. We have some other questions. I think the one is directed to you, Obed. How can I add gold to my portfolio? I think I heard Mr. Obed talk about that. Did you talk about gold?
Yeah, gold.
It's on you, Obed. How can they add gold?
Okay, so in our current terrain, if you look on the exchange, we have what we call the new gold. So that gives you exposure to gold.
Okay.
We also have the gold coin, which is an initiative from the government. Okay. So these are the 2 mediums that you can use to have exposure to gold investment.
All right. Okay. Yeah. Someone says, what investment schemes would you recommend for one's funds after mandatory retirement?
All right. Thank you very much. Let me quickly add to the gold question.
The gold, okay.
By investing in the pensions fund, especially for personal pensions aggressive, you will have exposure to gold. So you don't necessarily have to go and buy gold, but by way of being a member of the scheme and the trustees together with the fund managers strategizing for you, they give you all these exposures that you are not even aware of. Some of them are even external CIS, local CIS that, picks on great companies outside there, so that we can all, benefit from that. You don't need to go through all the complexities.
Yourself.
We are doing that for you. You understand?
Okay.
So we want them just to sign up, and then that will.
And that will be all.
Sure.
And Francis said, what investment schemes would you recommend for one's funds after mandatory retirement?
So after mandatory retirement, we came up with a great idea. And we have formed a scheme that is called Purple Drawdown. What it means is that instead of drawing down your money into your account, that immediately, I don't know how family members and friends get to know that you have money. They will come to you. They will come to you with all their problems.
Yes.
Before you realize, after
It's
6
finished.
months, the money is finished.
Yeah.
So all that we are saying that don't take that money out of the fund. Okay. Move it from your retirement account into the Purple Drawdown account. Okay. Work out your financial needs, because you'll be receiving contributions from SNIT, which is your tier 1, and then your tier 2 and your tier 3 that you've moved into the Purple Drawdown account. It will help you to be able to do a projection. So if every 6 months you will need some amount, then we can make that arrangement. So every 6 months, some money tips into your account to help you to be able to manage it. It's a win-win situation, because whilst you preserve that money, the money is in investment. yielding returns for
More
you.
returns for you.
Exactly. And then you are also drawing down gradually at your own pace.
Wow. You see why you should hear from the experts. Akosia, Francis again says, can I access my tier 2 if I decide to go on voluntary retirement after 15 years of active service? Can I access my tier 2 if I decide to go on voluntary retirement after 15 years of active service? If not, Yao, would you pick that? Okay.
So the law requires that for your tier 1, you have to do a minimum of 15 years to qualify. Depending on your age, you will be able to access your tier 2. Voluntary retirement starts at 55, and then mandatory retirement is at 60. So if you contribute 15 years and you fall within this age category, you can have access to your
access
tier 2.
to it.
Yes.
All right. Oh, but Mordecai is asking, what are some of the asset classes personal pension is invested in? So what are some of wow, looks like our listeners are experts themselves. Or they want to be.
Very well. So personal pensions is well diversified. So like Akosia did mention, it's in various baskets, aggressive, conservative, and all of that. If you put all together, you have asset exposure to even global assets through CIS. When I say global, even global equities and the likes. Through CIS, you have exposure to even the S&P 500, which is all seated in the enterprise personal pensions. You have gold, like you have mentioned, seated in the enterprise personal pensions. You have the local equities, you have the fixed income, and so on and so forth. So this is a well-diversified portfolio. And I think if you are invested in personal pensions, you should be rest assured that your portfolio has that resilience.
The resilience.
To weather through the storms.
I like that.
Right. Thank you.
Thank you. Yeah, let me, to add to it, okay.
So first half of the year, when the aggressive fund was doing very well, because of the performance of the equities on the stock market, we found some members requesting that they want to migrate their fund from the conservative into the aggressive because of the performance that they are seeing. Yeah. What we want to say is that you need to assess your risk appetite, because some of these funds, we have designed them based on risk. So if you don't want to see a dip in price, yours is the conservative, because there we don't expose you to all these equities and
if you don't have the heart.
If you don't have the heart. And so we even recommend that for those who are nearing retirement, so it's a personal pension.
Yes, it's too close.
It's too close. So you stay there on the conservative.
True.
Okay. And then those who have many more years, maybe just 20 years, maybe 20-something more years ahead, you can be in the aggressive fund, because you see, at the end of the day, the up and downs, when you do the trend, it's an upward sloping trend, and it's far better than the fixed income, securities will give you, because of the exposure that we give in alternatives and other variable income assets. So that is the advice.
All in all, because it's long-term, it ends up balancing itself.
Absolutely.
Yes, I like that. Okay, there's another question from Rahel. Can I use my tier 2 to access loan?
Okay.
Do you want to take it?
All right. So the tier 3 and then the tier 2 are designed that you'll be able to access a mortgage, a pension-backed mortgage. And I think about 2 years ago, we launched a pension-backed mortgage with few partners. And so that is possible. Okay. It is only to provide for your primary accommodation. So that is allowable.
Okay. So Rahel, you can speak to your consultants at Enterprise Trustees so that they will assist you or guide you in the process. And the last one from Marco says, since May, I have noticed a reduction in the monthly interest on the personal pension from May to June, as at today, there has been no material increment in the interest end. Is this because of the fall in dollar strength? Kindly explain. Who will take it?
So that is a major factor.
Okay.
And also interest rate has been trending downwards. So you should expect that going forward, returns on fixed income assets will also, go down. That has nothing to do with, chasing what is not within the space.
Okay.
Once interest rate is trending downwards, you expect that portfolios largely will also, be trending downwards. The good news is that, the quality of fund managers that we have, have various positioning to make sure that what they cap or mitigate how fast this, decline will be, right? So that is the good news. But we should probably expect interest rate to trend further down. Yes, but then exposure to other assets likely to keep the returns sustainable and reasonable to give you some comfort. But then yes, given what has happened a lot, especially within this quarter, that's why I believe the one asking this question is not seeing that material growth in terms of income. But then once all of this, settles, we should see somewhat significant improvement from what we are saying. Thank you.
All right. Miriam, would you want to add to it? Okay.
So what has happened is unrealized losses. It's only when you decide to withdraw your fund, then it becomes real for you, realized. So we will encourage our members to stay cool, and we will go through this because it's a long-term fund.
Yes.
So if you fret and then you decide to cash out,
You rather lose.
then you rather lose.
Yes.
Because it's a market downturn. It will go up very soon, and then you'll be back on track. So they should be rest assured that everything is under control here.
That's the joy of investing long term. It ends up, you will definitely benefit at the end, as long as you are patient. The last question from Miriam says, I want to know if the tax being deducted has been revised if I decide to withdraw some of my tier 2. Who will pick it up, please? All right. Stephen, do you want? Okay.
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 Thank you very much. So the tax rate is still at 15%, but this is on a tier 3. And the reason why the tax is there is to encourage you to keep your fund for 10 years. If you keep your fund for 10 years and you are withdrawing, the tax does not apply. But if you want to withdraw your fund before 10 years, because the scheme gave you a tax bonus or holiday when you were contributing, the government says that bring back that proportion of tax that you enjoyed. Back to me because you didn't really stay long term.
I get it.
Absolutely. But once you stay long term, the tax will not affect you. Even if they increase it and you stay long term, you are not affected.
I'm excited about today's conversation because the baseline is long-term investment will work out for you. Keep your money there and just keep asking the right questions and getting the right answers. But keep your money there. Don't let anyone deceive you. I'm concerned about trot deception. You'll be hearing someone and then the next thing you're taking chances. Okay, the last question is from Mohammed Salim. He says, can I get more clarity on how tier 2 rate of returns is calculated? Anyone?
With regards to the returns, we do daily valuation. And the valuation means that for the fixed income, we will look at the cost and then we will add the accrued interest over time. And so that is how we value it. And then for variable assets that we have, like equity, CIS, and stuff like that, we go to the market. And that is how come, some of these market price movement is impacting. So if today the price goes up, we'll go there and then we'll pick the price and then we use to value. And then we will distribute that returns to the members. So if we also go there and then the price has dropped, we'll pick it, we'll work it out, and then we distribute the losses also to the members. But like we've said, the good news is that because it is a well-balanced and diversified portfolio, You have fixed income, that is giving you consistency in terms of the return. So that one, because it's fixed income, we are guaranteed that you will get that returns at the end of the day. And then you also have some variable assets that is yielding variable income. That is the one that introduced the volatility into the scheme. But that's a small percentage of that. Depending on how significant the movements are, then it impacts it as we are seeing. But our fund managers are working with us together with the board and the trustees to make sure that the asset allocation and then the mix are well determined to minimize some of these blips that we are seeing on the market. But certainly the key is that stay in and the experts are handling your case for you.
Thank you so very much. Just before I thank all my panelists for this edition of Tomorrow Today's webinar, I'd like to encourage you and remind you again that in order for you to benefit from everything we've talked about, make sure that you update your details with Enterprise Trustees. There's a QR code displayed on the screen. Kindly use it. Follow the process and update your details on the screen. Very, very important. Your contact details, your address, make sure your name, make sure your next of kin, beneficiary, everything is updated on the system so that whenever you do need to claim, you will have no issues at all. Akosua Ejewa Nimakun is investment analyst, Enterprise Trustees. Mr. Stephen Tetete is say that again. A member nominated trustees, okay, on our underwriters tier 2. Okay, would you like to add something on the tier 2 question?
What was the question?
It was the calculation.
Oh, okay.
Yes.
Okay, so I think you did explain
it's just because I heard now that you're nominated.
Because
yes. Okay.
Okay.
Please add something if you do.
No, I wanted to add something on the concern about the dip and what members can do. So you'd realize that, like you rightly indicated, the funds are valued on a daily and it is unitized. And so based on the units, it determines the value that members have. And so members shouldn't fret even when there's a dip in the value. Like we've rightly said, there are market cycles, but also that it also presents some kind of opportunity. You know, when you're contributing and you're buying with a certain price, let's say you had a price of 10 and now your price is 5. What it means is that in terms of your units that you have, you're going to have even more. And so the more you contribute, you'd realize that your units also increases on that level. Yes.
Thank you, Akosua. Stephen, do you want to add to it?
Basically saying that further yes, we do the unitization, but then eventually when you are doing the valuation, you want to, look at the various assets and how, you can relate them to the market. So those are priced at market. You bring those, assets, their closing prices into the valuation. And then those that you do fair value, valuation, you bring those ones so that at the end of the day, when you run, the average, you have, the returns generated as, a unitized return for members.
All right, Stephen, and congratulations on your new role as well. All right, and then Obed Odente is the Chief Investment Officer at IC Securities. And we have Yao Kusi Echampong, who is Assistant General Manager Finance at Enterprise Trustees. Gentlemen and lady, thank you so very much for coming. Yes.
Thank you very much. I just wanted to, because you talked about the member-nominated trustee, I wanted to throw a little more light for the benefit of our members. Okay, so on the trust board for the scheme, we have the sponsor, Enterprise Trustees, and so we bring some members to the board. And then we go to the employers who have subscribed to the scheme or the members, and then we get member-nominated trustees from there to represent the
interest of the members.
Absolutely. Okay. And so that is exactly what it is. They will know that it is not like, Enterprise Trustees is sitting somewhere doing their members are in there, taking the decisions on their behalf.
That's a very good one. It means that for the members, you also have a representative there who is also looking out for your interest. No, that's really great. Thank you so very much. It's been really exciting coming your way. I have learned a lot, and I'm sure you have learned a lot too. One of the things that I'm going to take away, which Yao said, is to increase the amount of money that maybe you're contributing now, but we are encouraging you to even go further to increase it. The one painful thing is when you are old and you don't have enough to take care of you. When you are young, at least you can do when you are old. And so sometimes when we are young, we don't think about the future. But for us and for you who have watched today, I know that you're going to take the right decision and also encourage your friends and your family. But when you talk about pensions, or if you want to talk and plan for your future, remember to follow the brand that has your best interest, which is Enterprise Trustees. This has been today's webinar with Enterprise Trustees. It's been exciting coming your way. My name is Cassandra. We will come your way again. Make sure that you update your details with us so that you can continue to cash in. Bye-bye.
Okay, I think a major reason why people struggle to plan for their financial future is because of the lack of education.
Financial planning can feel overwhelming, especially when the future seems so very far. It's easy to push it aside when the urgency doesn't feel immediate. However, time passes quickly, and without a plan, the future can be left unprepared. Take retirement as an example. It often feels distant, so it's easy to neglect, but starting small is better than rushing later. The earlier the plan starts, the easier the journey becomes. I am Pearl, and this is Retirement in 60 Seconds by Enterprise Trustees, where all your financial questions are answered.